Good morning, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 25th of June, 2025. And what an interesting week this has been. We're right now pushing, what time am I? About 6:20, about 6:20 p.m. Today, the president was at the NATO event in The Hague. He's already gone, as I understand it. Met with Zelensky, from what I'm hearing also. He got NATO to come around. Who would have thought that he'd get them to really increase their defense budgets as much as they are? As much as he talked about Spain, he's going to double tariffs on them and all, he's going to punish them. There's really no way to punish them individually. Tariffs will be on the EU most likely, not on Spain individually, and that's how you pretty much work when you do that. But I understand his anger and where he's at. Now, when we take a look at the markets, you can see you're getting a little bit of a lift in the metals. The dollar was down today. The stock market was a mixed bag. And I think what the market's entering is the next phase. Now, let me explain that. The next thing in front of us are supposedly, the president's going to tell us what tariffs are going to be on different countries that we don't have a deal with. And he said it would be 2 weeks. This Friday, it's 2 weeks, so that's 2 days from now. We'll see if he meets that or if it was just another one of these, well, it's about then. But it has to be before July 9th when he has a self-imposed date to get that all done. So you're in that time frame. The other thing that we're trying to see is where is the Senate and the House on the tax bill? Because that's very important. The SALT part of it is one of the argumentative points that the market's working with. Child care is another one. Medicare is another one. So we've got to see what the final numbers are. But what about the budget? Are we going to go up by another trillion? Where's the debt ceiling? How's that going to come in and play? Once we're through with that, what's left on the table? So the markets will start anticipating where they're at. I think the Fed has given you all the signals that if labor starts weakening, they're getting themselves to the point where they might start cutting rates. So those are things you got to think about, too. When we take a look at tomorrow, we have a lot of data. You get the Chicago Federal Reserve National Activity Index at 7:30, the final look at the first quarter GDP. You're going to get advanced durable good orders. That comes out at 7:30, and jobless claims. Then at 7:45, Richmond Fed President Barkin speaks. We'll see if anything comes out of that. Could it be that that's the fourth Fed member that wants to go for a July move or not? Don't know. National Association of Realtors comes out with their U.S. pending home sales at 9 o'clock. At 9:30, we get the EIA natural gas report. At 10 o'clock, the Kansas City Manufacturing Composite Business Activity Index. And I was looking today at Micron Technologies. Beautiful. I think they beat their earnings call by 30 cents. That's quite a bit. They were looking for $1.60, $1.90. So that's probably supporting some of the tech stocks tonight. And that's the only reason I'm mentioning it in this particular update. Okay. So let's just go to the charts and see what they're offering. In the stock market, you've come up, you've been knocking on the door, trying to get through on a closing basis. This is a close-only chart. The 61, 62 and a half. It's close, but it isn't there. Even if it gets there, what's it mean? It means simply that from that April 7th break, the market has recovered everything, which has caught many analysts by surprise. I keep hearing them on the CNBC and Bloomberg, just how many were surprised how well the market has come back. You're still pretty far away on the S&P itself, but you know, what's to stop this market from going for those highs if and when we know more about tariffs and the tax bill? I don't think an awful lot. So I'm viewing this as a consolidation market that is looking for reasons to move, doesn't quite have them. You have a pattern of a lower low and a higher high. Obviously, this is the 12-day war and all the action from us bombing to suddenly a ceasefire between Israel and Iran that is so far in its third day of holding up. Let's give it some credit. We came down in the S&P and held the 200-day average. The 18-day average is right here. You came up, made a new high in the market on the whole move today, backed off ever so slightly tonight. For all purposes, about unchanged. And what is halting the rally right now is the upper Bollinger Band. You've got a fairly wide band here, so the question is, can the market latch onto it and get what we call that gorilla glue trade, which starts pushing the band out, or does the market want to come back towards the 18-day average to regroup? You're not getting a picture that answers that right here, as you're overbought, not embedded, and up to the Bollinger Band. When we come to the NASDAQ, it's a very similar picture. You can see you came down, came back up to the Bollinger Band here, fighting a battle. The key moving averages weren't hit. The 200 is right here, the 100 is down there, but you are overbought, you're at the Bollinger Band, and you have not yet begun the process of embedding. So the question is, where do you go? A big part of this rally are the AI chips. NVIDIA hit an all-time high today, so very impressive what's going on there. And as you heard, I mentioned Micron. They were up about 7% tonight. You've got a lower low, higher high in the Dow, caught in the sideways action and also overbought. This is very hard to deploy new money in when you're just sitting here like that. Very difficult trade situation, and no trend trade in the Russell either, which carries us to the DAX. And in the DAX, if you'll remember when we were up here, I said I thought the pros would step away. And down here, just 3 days ago, look at the videos, I was saying, that might be it on the downside. Where do I think we're at? No man's land. I think this, too, is waiting to see U.S. tariffs. What are they going to throw at Europe? How hard is Europe going to retaliate if they don't like what they see? I can't answer it. Europe's talking tough. They're already saying Boeing will come under their scrutiny, putting that company down a couple of dollars since that was said, because they have their Airbus and they can attack that and not buy any Boeing parts or planes. In the September 30-year bond, you're coming up as the market is starting to build in the Fed's next move is a cut. People are arguing, is the Fed late? You heard that today in the second day of testimony in front of the Senate Banking Committee. People going, hey, if you could make a 50-point cut when we had Biden in office in anticipation, what's wrong with doing that now? So the pressure is on Fed Chair Powell. He, of course, today was belittled again by President Trump, who called him a very stupid person. He is not a stupid person. He's independent. He doesn't have to listen to the president, and he's exercising the independence of the Fed. You want people that can stand up without fear of standing up. Is it time to cut? You know probably as much as anybody else. Is it or isn't it? If you knew what the tariffs were, I think you can make some decisions. In the 5-year note, you're up here. And by the way, why not blame the president for not saying what the tariffs are so the Fed can make the move? It's always the Fed, from the president's point of view, that is wrong. Make that, then belittle the man once the tariffs are known and you don't think he's acting right. It's a two-way street. As you can see, you're fighting the battle right through here. And again, I believe that we're forming a base. In other words, if the next move by the Fed is going to be to start cutting rates, you go up in the futures, not down. The market is starting to form a base, and I think you can see that. You'd have to really slice through that in order to say no, and I think that's all bearish the dollar. I think the dollar then, one of the reasons Fed's doing it to get ahead of the curve, but the Fed's then telling you the economy is going to weaken right ahead of you, and other countries have already been cutting rates to support their economy. So I think you're going to get that yin-yang impact. We go down, others go up. If you can break through these lows in the dollar, I still see the market under the 90 level, what we call a fifth price count. They're rare as can be, but when they happen, they impact markets, and you could be going to that. You've already hit the fourth count. When you look at the euro, you can see how the market's coming up. I wish it would embed, then I'd know more of what to do. Here, you're making new highs for the move, but you're overbought and you're against the Bollinger Band. That's always a difficult play. You've gone all over the board in the pound, from the upper Bollinger Band to the lower, back to the upper. And these aren't small moves. These are $1,000 moves back and forth. And the market's making you do the wrong thing to catch them. It's telling you to pick a top at the Bollinger Band, pick a bottom at the band, and I'll pick a top at it again. You get caught in those plays when the market latches onto the band the way it did here. Where do you come out at that play? Here you've had natural turning points, as I call them. That doesn't mean I'd have played it to do that. I would not have known. You don't know until after the fact that it's that turning point. I've still got June micro Bitcoin. I'm going to stop covering it today. So here's the market. I think you're okay there. Move to the July contract. It is just like the other markets in big sideways action, really not going anywhere. And take a look what they did to the crude. I mean, that's one heck of a drop in the market. It'll take an awful lot, another world event, to get the market back up here in short order. Long term, there's no way to know. But in the short term, I still think you're going to have more oil coming to the market than you think. Slowdown in potentially the U.S., other economies, potentially. Tariffs can do a number on all this. I don't think the headwinds are bullish for the crude. I think the headwinds are bearish. The one thing that might be bullish is if Israel and Iran did not stick to the game plan of deal with a ceasefire. If all of a sudden we had a big flare-up, this could flare up in your face, and you've got to think that through. Same thing in the WTI, which is now oversold and trying to hold right in here at these moving averages. In the gasoline, you heard what I said yesterday, I hope. You know, the president's going to, I think, get what he wants, barring anything in the Mideast happening, with cheap gasoline prices for the 4th of July. And in natural gas, even though that heat was immense and we keep hearing record breaking, you peaked out just going into this week, and you've had one heck of a break in the market off of it. So you try to catch these markets, and that's what my job is in the morning, to help you try to catch them. Talking about seasonality, talking about what happens when you get your first hot spell. What does the market normally do? I bring with it 60 years of experience now. I got my license in '69, so it's not quite 60 years. It's 55. I mean, that's quite a bit of years, and I love what I do. So, you know, that's the beauty of trading. Trading is a game. You have to have no ego. You're going to have wrong trades. If you have an ego, you become what's called an investor, and you just keep feeding money into losing trades. If you're a trader, you can ride the ones that are working. You learn those techniques. The worst thing you could do is fight the work on what you're doing. Try my combo package. Go to our website, iraepstein.com research. I talk the Spiders ETF stocks in the futures markets. They're about 2.5 hours apart in the morning. I give you first at 6 in the morning the futures, then at 9 we're recording for the Spider ETFs. There's reasons for that. It all has to do with the market reports that are coming out, and away you go. I'm Ira. Thanks for watching. You can see the icons up here. Give them a click, and you'll be right where you have to be. Take care.